Types of taxes in USA with examples. In the U.S., taxes are levied by federal, state, and local governments to fund public services such as education, infrastructure, and defense. Taxes fall into three broad categories: taxes on income, taxes on property, and taxes on consumption. Taxes on income. These taxes are imposed on what you earn, including wages, salaries, and investment income. Individual income tax. This is a tax on a person's earnings. The U.S. has a progressive federal income tax, meaning the rate increases as your income increases. Most states also have an income tax, and some cities and localities have their own as well. Example: in 2024, a portion of a single filer's income is taxed at 10%, while a higher portion is taxed at 12%. The total effective tax rate is lower than the top marginal bracket because of this tiered structure. Corporate income tax. This is a tax levied on the profits of businesses and corporations. Example: a company's revenue minus its business expenses, such as employee salaries and office rent, results in a taxable profit. Capital gains. Tax. This is a tax on the profit you make from selling an asset, such as a stock or a piece of real estate, for more than you paid for it. Example: if you buy a stock for $100 and sell it for $150, the $50 gain is subject to capital gains tax. Self-employment tax. For people who work for themselves, such as freelancers or independent contractors, this is a tax to cover both the employee and employer portions of Social Security and Medicare. Example: a self-employed graphic designer would pay a combined rate of 15.3% to cover both the employee and employer's share of FICA taxes. Taxes on property. These taxes are levied on the value of a person's assets. Real estate property tax. This tax is typically levied by local governments based on the assessed value of a property and is used to fund local services like schools and fire departments. Example: if a home has a taxable value of $50,000 and the local millage rate is 20 mils, $20 per $1,000, $1,000 of value, the annual property tax would be $1,000. Estate and inheritance tax. An estate tax is levied on the total value of a deceased person's assets before they are distributed to heirs. An inheritance tax is paid by the beneficiary who receives the property. Example: the federal government and some states impose an estate tax, but it only applies to assets that exceed a high exemption amount. Gift tax. This is a federal tax on the transfer of money or property from one person to another. It is generally paid by the giver, not the recipient. Example: you can give up to an annual exclusion amount, $19,000 in 2025, to any number of people without incurring the gift tax. For larger gifts, the amount over the exclusion reduces a lifetime gift tax exemption. Taxes on consumption. These taxes are applied to the purchase of specific goods, services, and activities. Sales tax. Collected at the point of sale, this tax is a percentage of the retail price of goods and services. There is no federal sales tax, but most states and some localities impose one. Example: when you buy a $100 computer in a state with a 6% sales tax and a county with a 0.5% tax, you would pay $106.50 at the register. Excise tax. This is a tax on specific goods or services such as gasoline, tobacco, and alcohol. It is often included in the product's price and is not itemized on the receipt. Example: an excise tax on gasoline helps fund highway projects, while a sin tax on tobacco is meant to discourage consumption. Tariff, customs duty. A tax imposed by the federal government on goods and services imported from other countries. Example: a tariff could be applied to a car manufactured in a foreign country and imported into the U.S.